At the moment, we're facing a lot of different hurdles in the housing market, with interest rates sitting near 23-year highs and climbing, home sales near, yearly lows for sure. And then at the same time, we're sitting at record low levels of inventory. And today's video is really focused to the buyer out there that's watching this type of content, wondering, am I ever going to be able to find a house? How can I find a house in a market where there's not a lot of inventory out there? I wanted to bring in an expert, someone that I know that, kind of tracks the data, watches what's going on there, has access to a lot of the public records and different things out there that's able to help with this solution, if you will. And that's Sean O'Toole with Property Radar. Sean, welcome to the show.
Thanks for having me. Glad to be here.
Yeah. So Sean, maybe just give us a little brief background. I don't come on here. I don't talk about products on my channel at all. In fact, this isn't a product pushing video at all. It's really a conversation to help buyers out there in the market. But you have something that I use personally that I find value in helping search for clients and helping search for investors and just being able to find property in an environment which is very, very difficult. So, your background, it goes a lot of different directions. So I thought I'd just let you introduce yourself.
Yeah. Well, I'm the founder and CEO, or no longer CEO of Property Radar. We hired a CEO this last year, but still very active here. I got my parents bought a computer when I was 10, which was 1978. So very, very early on. And I kind of took to that and ended up doing well. Started my first software company, dropped out of college, start my first software company at 18. And, went to Silicon Valley and spent a lot of time with a lot of other really smart people trying to solve other people's problems. And after the dot-com crash, through a great story, but a long story, so I'll save everybody, I ended up flipping houses, kind of 2001 through the end of 2005, flipped 160 properties. And actually not just houses, commercial properties, office, industrial, quite a bit of different stuff, a Taco Bell. So, through that, discovered public records and just was blown away by how much information was out there and how useful it was. And really that's how I made all my money as an investor, and didn't feel like there was good tools out there to help people search public records and use it to find deals. So, and then the foreclosure crisis took off, and we launched originally as Foreclosure Radar, kind of the picks and shovels to the foreclosure crisis, not just to investors, but even like school CFOs who needed to know how foreclosures were going to affect enrollment. And then we expanded beyond foreclosures to all properties in the United States. So.
When I came across the product, it was Foreclosure Radar. That was back in, shortly after the heyday of the greatest financial crisis in history, and at that time I was selling a lot of foreclosures for Fannie Mae and Freddie Mac and Wells Fargo and Bank of America and just different places. And really it was about, trying to get that information, and we were using it for other sources and what have you. But today the climate's different in many different ways, right? So today we don't have the distress that we had in '08. Quite frankly, we don't have the inventory that we had in '08. But we do have a lot of people that still want to become homeowners. And something I often talk about is the willing and the able. And so the able at the moment is somewhat limited because of housing affordability, because of, due to rates and the lack of available supply out there in the market.
And
but
price.
With that, and prices. But with that at the same time, there's still a willing demand out there in the market, people that want to own homes. And me, for one, I will tell you kind of quick story here. Like, I know I'm actually in escrow as of today on a property to buy a house. That property was an off-market property. I found it myself, fortunately through a friend, because he was selling his home and what have you. But it's something that never hit the market, not going to hit the market. So it was never an opportunity for the majority of people out there. And that's kind of the future of what I see in real estate, is that inventory is not likely to move in any meaningful way because a lot of people have super low rates. I, on my primary, have a 3% interest rate, have a lot of equity in that property. And I sit like a lot of people. I've got a lot of that tied up into that property. And I'm thinking, I don't want to sell that property unless I can find the right home. And this is the situation for me. I'm now able to find that right home. Therefore, I'm transitioning, the equity in that property to another one and what have you. So we talked kind of off camera about the idea of the market changing. You see a market here. You can talk about timeline wise that inventory isn't going to really increase, but you're going to have a home buyer that needs an expert on their side to be able to help find property because the lack of inventory out there. Commission, we've got this whole commission lawsuit right now within the industry. Hard to say what's going to happen, but it could end up affecting the way that buyers agents work. And so with that, what are your thoughts?
The largest, brokerages settle and agree to change their practices. So we know change is going to come out of it, regardless of where the lawsuit ends up.
And so how does that affect the homeowner? And how can the homeowner and or the agent in this case both benefit in a way that helps them provide the property they need and in turn, kind of keeps the market moving along? Because the fear for us as real estate agents, quite frankly, is no transactions out there in the market. We make our money based on the number of transactions that we do. And there's always going to be buyers in every market. I mean, even during the housing crash, there were people still buying homes. So that's not going to change. But what's going to change is the number of transactions happening. And so how do you set yourself apart in a market like this as a buyer and or as an agent in order to kind of get in front of that?
Yeah, I mean, unfortunately, as an agent right now, if you want to grow or even maintain your business, you're going to have to do that by taking market share from other agents, right? So that means you're going to have to outwork them. I mean, that's the really simple answer, right? The number of transactions is going to be lower, has been lower, and it's going to stay lower until we see, some sort of significant shift in the dynamics of the market, which don't seem to be on tap anytime soon. So I think that's the foreseeable future agents should, prepare themselves for. And the same thing for home buyers, right? This lack of inventory, high prices compared to rates, especially, right? I like to say, homeowners don't buy based on price. They buy based on payment, right? It's what their mortgage company tells them they can afford is how much house they buy. And I don't think we focus on that enough as agents. I've been a broker for 20 years, right? We think about price. We don't think about payment. But payment's really the right way. Affordability, payment's really the right way to think about real estate. What can you afford based on your income, assets, et cetera? And, that's a lot worse than it was a couple of years ago.
And with that, what do you see being the change? Because I often come in here as a real estate agent, right? First, I'm a broker as well, but I sell real estate. Video, YouTube, podcast, all of that stuff is secondary to what I really do. I'm able to do that because I sell real estate. So I take my real life experience and I bring it to camera, I bring it to audio for people to listen to. But I often get claimed as being a housing bull, someone just pushing housing to promote, my own pockets, which neither of those are true. But the reality is I do benefit from people buying homes. So that's the reality. So I selfishly want people to buy homes, but I want them to buy for the right reasons. And I often talk about that. Property Radar is the best place to find exclusive off-market seller leads. In fact, they're the sponsor of today's video. So if you're a real estate agent watching this video going, Jeb, there's no inventory out there. How do I generate business in this market? Well, Property Radar could be the answer. And if you're a buyer going, Jeb, there's no inventory to buy. I'm actively looking at the market to purchase a home and I just can't find the home I want. Well, you need to be working with a real estate agent that has access to Property Radar. With Property Radar, you can effortlessly uncover off-market deals on a large scale, and you can automate the process. It's really simple to integrate and create automations with the apps and services that you're already using to help propel your off-market prospecting, whether you're an individual or you're on a team. In fact, a lot of the other competitors out there are settling for oversized and outdated lists, whereas when you use Property Radar, you have the power to craft high hyper-local and hyper-targeted lists using their exclusive 250 plus criteria. These lists can even update themselves, ensuring you have the most up-to-date information. By honing in on specific niches and opportunities, your messaging can be perfectly refined to resonate with potential sellers out there in today's housing market. And within this all-encompassing platform, you can access owner information as well as enhance property data, making Property Radar an indispensable tool for real estate professionals in today's housing market. But what changes the market dynamic now? Because I, for one, thought the Fed at this point would have kind of backed off. I thought that you got way too much going on in the economy. There's a lot of debt. There's a lot of just different things going on in the economic climate that I thought the Fed would pause now. The idea at the moment, as of the last couple of days, is that rates stay higher for longer. So if rates stay higher for longer, what does that do to inventory? What does that do to prices? Because you're a guy that has a lot of data. What does that do to those two metrics that affects the buyer? And can the buyer benefit in any way in some other fashion in order to still make a purchase in this environment so that they're not competing against other people?
Yeah, a lot to unpack in that, and it is tough to be a buyer. Let me start just on the bull bear thing, right? Like, I think the number one thing that the bears have missed, that all the people that have said housing's going to be down 30% by now, right? And with the change in rates, right, and assuming that buyers buy based on payment, if everybody had to sell their house today and rebuy a house, prices would be half. That's just a fact, right? Like, people that live in their homes today can't afford the house that they're in, right? And that's a big reason we have the inventory problem. So, make everybody sell, rebuy, great reset, prices would be half. They should be half of where they are right now, right? Mm-hmm. So how does that happen? The bears would say, oh, the economy's terrible, president's doing a bad job, blah, 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 this whole thing's going to crash. I think what most of them missed was that we had the majority of homeowners refinanced to 2 to 3% rates. And that put $500, $1,000, $2,000 a month of cash that they never had before in their pocket. At the same time, we went and disrupted the entire, supply chain, and so therefore had quite a bit of inflation. And at the same time, we went, pretty hard on the anti-immigration and some of this stuff. And we've got a lot of baby boomers retiring. So there's all these forces that are reducing the workforce. So we've got low unemployment, goods costing more. We've got a populist movement that's anti-globalism. So we don't want to buy cheap stuff from China anymore. But I don't think people think through that if we don't buy cheap stuff from China, stuff's more expensive, a lot more expensive, right? So we've got all these kind of factors right now that are going to keep the economy a lot stronger than we'd think or expect otherwise. A lot of extra free cash flow from that refinance boom and the rest. And so we still see a lot of people out at restaurants. We still see a lot of people at hotels, way past what everybody thought would happen. So what changes where we're at? So one is just time, right? So I don't expect we're going to see a lot of price inflation on homes because of this situation we're in, right? We haven't seen the decline. In some markets we have, but for the most part, in a good, strong market, we may not have seen any decline at all from the peak during the pandemic. In some weaker markets, we're seeing some softening, maybe 15%, something like that, but not enough to really impact buyers. So time will fix that over a period of time, because wages will inflate, prices stay flat, then that affordability as a percentage of income gets better. Not next year, but over time, 5, 10, 15 years. Right. What's more likely to happen is, the black swan or the gray rhino, which is that unexpected event. The internet is a black swan. 9/11 is a black swan. The pandemic is a black swan, right? there are these things that occur. Russia's invasion of Ukraine, right? There are these things that occur that have economic impact and cause, major change. And my bet is, we will have one of those. It's whether it's next week or 5 years from now is really hard to know. And my guess is when that happens, we don't see dramatically lower prices. It's possible. I don't think we'll see another foreclosure crisis like 2008. We learned that we can just sit on the inventory instead and let people not make payments. So I don't think we'll get another buying opportunity like that in our lifetimes. What's more likely, though, is because this is what the Fed has done every time, is we'll get dramatically lower interest rates. So, it's a bet. I can't guarantee it, but if you buy a house today, do you get a chance to refinance at some point in the future? Probably during some bad event. So you better have your income ducks in a row during that bad event in order to refinance. And you probably end up in a great, a better position. The other thing, there's two reasons to own real estate in a home. Forget about real estate as an investment. But two reasons to own real estate as a home. One is like you own it, you have control. You don't have to worry about getting evicted. Your landlord saying they want to move in or whatever, right? Or deciding to sell and they sell it to a home buyer. So it just removes all of that angst, which has value, right? The other thing is the 30-year fixed mortgage, because we will have inflation, rents will go up, and you can fix your payment for 30 years, especially if you don't refinance and take money out. And you know what? Time will heal all wounds. So yes, this market is probably overvalued by 2x in my opinion, but I don't see that opportunity to buy at 50% coming anytime soon. And if you can afford it now, over time, it'll work out. Even the folks that bought in 2006 at the peak of the market before the greatest housing downturn ever are fine today.
No, agreed. Yeah, I was one of those people too. So I bought in 2006 and it was, a complete disaster to say the least. And it literally bought at the peak and ended up selling the property for $600,000 less than I paid for it. But fortunately, I was in a position to buy again in 2012. And that house is nearly tripled in value. And it was, for me, it was the right time in my life. And this is something I talk about all the time, Sean. It was just got married, just had my first kid, wanted to move to a place where family friendly. We were planning on having more kids. It was just the right time. And at the time, the payment was higher than I was renting for. I could rent something for less expensive. But today, I could rent that same property for about $2,000 more than my mortgage payment. I was able to refinance 2 to 3 times during that 10-year period of time, currently sitting on a 3% rate. And so, while rents went up during that same period of time. So it's not always about trying to time the market. It's about, finding the right property, in your life and then making the decision whether or not it's right for you right now. And that's where I'm at, right? The property I'm buying now that I mentioned earlier, it's the right time in my life. I've got 3 boys living in a 3-bedroom, 2.5 bath house. Can we make it work? Absolutely. We can make it work. We don't need to do anything, but we would like it. We're in a position to do it. It's the location that we like. It's all of these things that it's just, that's what it is for me. And that's what really what I'm trying to preach here. So anybody saying, hey, Jeb, you're just a bull on the housing. Yeah. If that's what it means, then yes, that's what I am. But I don't think you should be buying a house just because
it's the right thing and you're going to stay for 10 or more years. Like, there's no question it's going to work out over a long time frame.
100%. So, how does a buyer right now that wants to buy, can't find the inventory, what's the option? Like we talked off the thing, you think the idea of a real estate agent is going to change or should change in the buyer's eyes to some degree. What should a buyer right now be looking for, not just in the market, but in their agent?
Yeah. I think we've been in this situation, for quite a while where, we look at the MLS and we look at Zillow as the homes that are available to buy. And that's all we look at. And that's all agents look at. That's all buyers look at, is that list of homes. But that's now maybe 3% of all the homes that exist to 5%. Typically 5% of homes are listed at any given time. It's a little lower probably right now. So that 3 to 5% range. So that's 3 out of 100 homes that you're looking at on Zillow out of what's possible. And, so you buy a house and the next day, a house you like way better, down the street comes up for sale. Like, that sucks. And it happens all the time. And it's just the way this industry has worked for a very long time. One of the things we talk about is with public records data, right? Nobody's in the car with their agent really anymore. You usually go meet at the property. But let's say you're in the car with your agent, you're driving down the street and you go, oh, I love that house right there. I wish that one was for sale. What no agent has done ever, and what every agent should do every single time, is pull over right there, look up that house in public records, find that owner's phone number, and call them and say, hey, my client absolutely loves your house. They're in the market. They're anxious to buy, whatever you want to say, right? Are you thinking at all about maybe selling? Probably 80% of the time, that answer is going to be no, right? And so, but that 1 out of 5 time where it's yes, you get a listing and a sale, it's awesome for you as an agent. But the most important thing for both you as an agent and for the home buyer, right, is you have somebody who's resourceful, going to go to bat, make things happen for you. Like, you look like a rock star versus every other agent out there if you take that step.
No, we've as agents, I'm saying we, self included, have gotten complacent to some extent when having a client have access to the MLS, they have access to Zillow, they have access to Redfin, Realtor, all of the sites, and they all syndicate more or less the same stuff. But we're used to the client reaching out to us saying, hey, Jeb, I like this house. This is the house I like. Versus us, when I got in the business, I would do a lot of that research and try to find properties because, again, and it wasn't even properties that were off market. It was properties that were on the MLS, but we had a lot more to sift through. So it was going through all of these things. At the moment, it's like, well, there's not a lot out there. You can do the
buyers didn't have good tools to go sift through them themselves. So they kind of relied on you to go pull the things out and show them to you.
Yeah. And it's changed considerably. And so myself included, like I mentioned a moment ago, the property that I'm in escrow on, I was able to find not through public record per se, but through somebody that I knew personally. And, had you had access to his information, you probably could have gotten him to entertain another offer, but I'm the offer at the moment. And because it never went to the market, I'm able to get my offer accepted. So I think that's the key with public record. I was actually really surprised by putting my name in there, Sean, and literally everything about me came up. Every email address I have, phone numbers, address, wife's name, I'm like, you can really get a lot of information here. And it's kind of scary to some extent.
Yeah, a lot of people don't realize, that. And, let's just dive off onto that just for a second, like the privacy side of it and the rest. I think what makes America great, right, is, the tax collector can't give his buddy a deal because what you pay in property taxes and who owns the property and all that stuff is in the public record. And it keeps us from being, a banana republic. And so there's a trade-off there in that people can find out you own that house and they can find out what you paid for it and they can find out how much your mortgage is and the rest. But, it's a lot easier for us to borrow in the United States because we have that system, because somebody else who wants to make a loan can trust that that other loans are recorded. They can trust what their position is going to be if something happens in a default. And, so there's a really positive trade-off there. And, it's super helpful when you need to reach a neighbor. You've got somebody whose property is, having an issue that you want to alert them about. You can look them up, find them, contact them, and the rest. So, there is a trade-off there. Some people get freaked out on the privacy side, but it served us well for over 100 years, and it works.
Well, and the reality is it's there regardless of whether you like it or not. So you might as well use it to your advantage if you have the opportunity, because if you don't, somebody else is going to do it. And this is the environment because of the lack of inventory. If you're a buyer and you say you want a particular neighborhood, you want to live where I live, in the neighborhood I live in. At the moment, there's 2 active listings as of today, mine included, right? Because it just went to the market today.
Yeah.
If you want something else in there, you don't like the location, you don't like the floor plans, you don't have an option other than going around and knocking on doors. But you could go public record. You could do things like, find out how much, somebody that's owned a property for an extended period of time, has a low mortgage, and I don't even know if there has the ability.
Maybe they have an assumable mortgage.
And that's where I was going with that too. Yeah. If you're somebody looking to take over a mortgage.
And most people who have assumable mortgages don't know that their mortgage is assumable, right? Got a veteran, they just went out and got a VA loan because they're a veteran, but they don't know a VA loan's assumable. And it's a huge value to them as a seller, right, on their home. But guess what? Whether or not it's a VA loan is public record. So
that's good.
And that's an assumable loan, FHA loans, et cetera. So, that's there's really interesting opportunities there. So sometimes you don't want the person with low equity. Sometimes you want the person with a lot of equity. You want somebody with very little equity, but that has an assumable loan, because now you can come in, hopefully with not that much down, and assume a loan that's maybe still in the 3s.
Yeah, no, it's a really, really good point there. And something that Sean didn't mention, but if you're, there's a VA loan, you don't have to be a veteran to assume that loan. They allow non-veterans to assume those loans. So somebody's listening to this going, hey, I know a veteran that has a loan, but I'm not a veteran. You can still assume it, right? You still have to get qualified. You still have to go through the guidelines and get approved. But the reality is that's an opportunity. And sellers that have those, quite frankly, can probably offer a premium or sell their property at a premium to some extent because of that low fixed rate.
Not based on price.
Right. Absolutely. I would have paid the seller who's selling his house today way more money, not way more money, if his loan was assumable. If I could get a 3% rate,
the cost would be lower.
Yeah, he's sitting on a 2.75. I'm essentially getting 6.75. So would I pay him $50,000, $100,000 more? Possibly, because my payment would still be significantly lower with his rate than it would be with my rate.
Yep.
Yeah. Yep. So so there's a lot
for you to do it.
I'm sorry?
It would make financial sense for you to do it.
Oh, absolutely. And the thing
is,
win
for the seller, win for you.
And the tools are there, the opportunities there. If you're somebody that's looking to do that, maybe you're a new agent, maybe you're a buyer just looking for other opportunities. Your agent's not doing these things. You have 2 options. One, you go find a new agent that has the resources to be able to do this. Or secondly, you just do it yourself, right? Because again, with Property Radar, the opportunity's there. So, Sean, we can go a lot of different.
We do officially only serve professionals, so I don't want to put it out there as a consumer tool. But yes, I think finding an agent, you will need an agent, probably help with contract and all that stuff, anyways. But yes, so.
Here's the option with that. So if that's the case, you want to find an agent that has access to it, reach out to me directly, right? I'll put a link in the description. I'll refer you to somebody. If you're in a state that needs an agent that has access to Property Radar, we can make that happen for you so that you can find somebody to connect with that has access to the tools to be able to guide you in the right direction. I think that's probably the easiest path there to get somebody in a position where they're working with a professional, somebody that's taking that extra step to have a tool that's, I wouldn't say it's unnecessary, but they're going outside of the normal realtor wheelhouse, next level, if you will.
Definitely leveling up. Yeah,
absolutely.
And they can go through and they can pick based on lots of different criteria. So whether it's beds, baths, square footage, all those obvious things, but also, other stuff, this side of the street versus that side of the street, particular streets, even going through and, picking the ones on the map, like, I don't want any of these are outside next to this freeway or, whatever. So there's a lot of tools to like narrow down to those off-market homes that are the best fit.
And with that, Sean, forgive me for not knowing the answer to this, but is there anything in there that shows you people likely to sell for one reason or another?
Yeah, so the likely to sell thing's a really interesting thing. There are companies now selling likely to sell leads, and that just uses you basically you look at the data of past sellers, you compare that to data of the folks that are not yet sellers, and you look for ones that correlate. Um, there's two problems with that, right? As an agent, um, if I get a list of likely sellers, what do I say when I call them? Because I don't know why they're likely to sell.
Right.
The AI doesn't know why they're likely to sell. It's just saying these people sold, so these people may sell. And without knowing that motivation or reason, it's hard to make a connection. Like, hi, I hear you're likely to sell. Like, what? Like, what are you talking about?
Huh.
And if you're a good agent and you've got your feet on the pulse of what's going on, you know why people sell. Here in Tahoe, people sell after a really big winter that have never lived through a big winter before, or who are in their 70s and just go, I've had it. I can't do with this much snow anymore. I'm getting too old to shovel, whatever, right? Like, we know who is likely to sell, in a market that has nice homes, but maybe not a very good school district. They get school age kids. They're likely to sell. Like, we as agents, often if we just think about the transactions we've done and that our friends have done, we know who's likely to sell. And if you've got a lot of criteria, you can go specifically look for those folks, market to them, and with a message that matches that likely reason.
No, good information. And with that, I mean, the people that I'm seeing selling, a lot of them at the moment, people that going through divorce, people that, there's a change in title there. Can same thing with death.
Yep.
Someone passed away, left the property to their kids. There's a change in title there. People that have to move, which is a little bit separate for one reason. Maybe it's a relocation. Maybe they're selling a property.
Back to office is a big one right now.
So those are all things of reasons why people move. Some of them are a little bit easier to nail down. Others, it's going to take some boots on the ground and different methods to get out there. But I think the important thing is finding somebody that's willing to go above and beyond, do those necessary things in order to help you, and quite frankly, in order to earn the commission that they're getting, because we as agents have been, rewarded over the last couple of years in what we've been doing. Not saying it's not a lot of work, but we're not out there pounding the pavement, finding property in a lot of these places that, open up opportunities.
Commission lawsuit, right? As a buyer, you should expect to have to start signing an exclusive agreement to, for an agent to represent you. And as an agent, right, you should start thinking about, okay, I may be asking the buyer for my commission because the seller may no longer have to offer a buyer's commission, or may not, that may become less of a thing. Maybe not. We'll see. But I'm going to have to now sell my service to this buyer and convince them that I'm worth the fee that I'm asking for, because it may not be the seller picking up that tab anymore.
And that's going to be an interesting take, and that's going to change the market dynamic as a whole, and in agents and buyers' expectations and really everything. So if you're out there,
if you're an agent that's got a bunch of testimonials on their page saying, oh my gosh, we couldn't find a home, and our agent found one that wasn't even on the market, and that's your list of testimonials starting now. When that change occurs, or if it occurs, you're going to stand out when somebody's looking for an agent and going, wow, who am I really going to pay? Because they're going to think about it a lot harder.
Yeah. I mean, again, most of my business is past clients, friends, family, right? Relationships. And if you're at the party or that client's at the party and they say, who's your realtor? Where'd you find that property? Oh, it was off market. Jeb helped me find it. It never came to market.
I never would have found it without him.
Yeah. I look like, like the winner in that situation. And guess who comes now? Those people looking to buy a home. So yeah, it's about setting yourself apart, kind of rising, leveling up as you said, and making yourself, different, because the market's changing. Us as agents also need to evolve and kind of go that direction too. So
Here's the other thing, just for agents, because I think you do have agents listening as well, right? Here's the other brilliant thing about this strategy for an agent. So you've got a buyer who wants a specific home. You're going to go market to all those homes and to see, with a buyer in hand, saying, I've got a buyer looking for exactly what you have, right? So it doesn't work out, right? But over time in your market, you're going to be mailing or calling or knocking or emailing, whatever, this group of folks on a regular basis saying, I have a buyer. So when they go to sell, do they go to their cousin, or do they go to the person who sent them 10 communications over the last couple of years saying, I have a buyer? I think that person, even though it wasn't a fit for one of your clients, probably calls you because they know you're the person who has buyers.
No, agreed. Yeah, it's setting that precedent that you're going above and beyond, regardless of what side of the transaction you're on. I mean, people remember that. And again, it's about creating advocates of your business, as a real estate agent. Now, I realize a lot of buyers listen to this too, but it's about finding an agent that's doing this stuff. That's how, again, you should set yourself apart. And if you're just starting the process, and you need one of those agents doing this sort of thing, using these resources, these tools, check that link in the description below. We'll definitely get you connected to somebody that can guide you through that process. So Sean, if I think good place to leave it right now, with the information we provided, but I'll leave it. I'll kind of throw it your way, let you, kind of tie this whole thing up, pretty little bow on it. If you're a buyer out there in the market right now, what should you be focusing on?
I think as a home buyer, the primary focus is the longer you stay in a home, the better financially it's going to work out for you. So finding the home that's the very best fit for you within what you can afford, right, gives you the best chance of having it be a financially successful transaction. So even if that's in 2006 and there's a major downturn, but if you're staying 10 plus years and you get to 2016, even in that very worst case scenario, you're back to break even, right? And you had a nice place to live that you enjoyed, that you raised your family with a fixed payment, no landlord over your head, and all the rest, right? So
forced savings. You paid down the principal during that 10-year period of time.
And
so maybe your property value didn't go up, but you still have equity in the property.
So a lot of people say, well, I can't get the house I want right now or whatever. And if you can't see yourself in that house for 5 or 10 years, then, that's the main thing. Look at that longevity. What's the thing that I can buy right now where I'm going to be happy for a period of time? And then you can kind of not worry about this whole risk question.
Agreed. Yeah, I agree 100%. And that's where we'll leave it. As I always say, buy when it's the right time in your life. Make sure you have money in the bank. You're comfortable with the payment. And more importantly, in this environment, that you have a longer term time horizon. With that said, buy right, borrow smart, build wealth. Until next time, adios.